Hello everyone, I'm so excited to interview Dahlia and get to know her and her team that works with real estate investors all across Canada. So in today's video, we're going to talk about how to find a good mortgage broker. 3 non-negotiable criteria. Definitely want to check that out. What are the differences between a bank and a mortgage broker? What properties does Dahlia and her team focus on? Because they worked on thousands and thousands of deals all across Canada with real estate investors ranging from residential to industrial properties. So you definitely want to hear about that. And 2 tips on how to finance properly. One in which you'd probably be pleasantly surprised. So if you are an aspiring real estate investor or you're a real estate investor looking to buy your first and next rental property in Canada, then you definitely want to check out today's video. Okay, hi Dahlia. Thanks for returning to my show. So we've got a lot of questions here that I'm going to ask you. It's because I think the audience wants to get to know your team and what you do. And you also have lots of tips and tricks. So I just want to ask first questions what are the biggest issues you find with financing all these real estate deals across Ontario?
There are several issues, but I'll highlight the 2 common ones we see. The common one we see is clients coming to us thinking that they no longer qualify. Their bank said no. Their previous broker said no. There is no way to get something done, or they can't move forward with their portfolio. And we untangle the issue and open up borrowing power, and we get them to the not just the next deal, but the following and the following and the following. So that's a very, very common issue. And when clients hear a no from somebody, it's not an absolute no, is what I'm trying to emphasize. It's just a no in that lender's world or in that broker's world. It doesn't mean that all strategies or options have been exhausted. So that's a very common issue. The second common issue is clients who take private money and have not validated exit strategy before taking the money. So unfortunately, they get to a situation where the private loan is up for payment and they need to now refinance or pay up this capital, and the deal doesn't work, or they can't get enough money out to pay off the private money. Why? Because they have not validated that this is doable before they took the private money. We still find solutions, but it's much smoother if that's a topic that is tackled upfront. So these are the 2 common ones that I tend to see.
Yeah, well, I could say I fell in the first one where I thought, oh my God, the end of the world. I'm only could finance 3 rental properties. And then I met you. And then it was like, my mind was blown. And now we've worked together for, I don't know, many years, 7, 8 years. It's been a long time. And yeah, it's next. Okay, and each one has its own rules. And like you're saying, I totally agree. So, I was wondering, a lot of people do ask about what's the difference between 2 key differences between a mortgage broker and a bank, because we're talking about financing rules, but let's get into a little bit of the weeds between the 2.
Yes. So I used to work for a bank for 15 years, and I got to learn how banks work. And then I switched to the broker side, and I am on the other side of the coin. Here is the key differentiator. Okay. When you're working with a bank, each bank has their own ways of running the numbers, their own criteria for assessing deals, and their own products, full stop. So when you go talk to the bank, they're only talking within their own box. When you go to a broker, the broker has got several shelves behind them, different banks, different rules, different products. And the broker is really working with you as a client to say, what is your need? What are you looking to do? And then now they got different things behind the scene to tap into to bring to the forefront, where the bank is just saying, this is the one shelf. Here's a product. Does it work? Oh, it doesn't work. Sorry. Next. But that's not what the broker does. So that's the key difference.
So I guess then with your team, I believe that a lot of your team members are also real estate investors. So wouldn't that be another specific difference? Because I found working with the banks, I'm they're quite transactional is one. And then, but at the same time, they don't understand the rental property, business. So I'm just curious, what's the, I think that's a big distinguishing factor from your team.
Yes. Thank you for that
Mm.
reminder. Aside from brokers bringing the best of the lending world to clients, there are specialties within the broker channel. So there are brokers who specialize in working with first-time home buyers, bruce credit, self-employed. There are categories, and then there are brokers who does a bit of everything. So in our case, we specialize in income property financing, residential, commercial, and we understand all of the money tools that come into owning and building a rental portfolio. Everything from your bank loans, alternative loans, private money loans, vendor takebacks, joint ventures, and how we put them together. And all of us here at the brokerage own income properties. So income
Mm.
properties approvals are a lot more complicated than buying your first home or your second home. There are so many rules. So that is really where we shine as a brokerage, and why clients come to us and we're able to find solutions that others may not have been able to think about. It's because we've mastered our craft over 11 years, just working on the same thing over and over and seeing thousands of portfolios, thousands of investors, and that's how we've honed in our craft.
I was curious, like you spoke about commercial, joint ventures. Is there specific properties that your team really focuses on? I mean, I know you says income producing, but what does that really mean? Types of units and stuff.
We don't do everything. We do work on properties that we see investors generally grow into. So, single family duplex, triplex, fourplex, fiveplex and up, apartment buildings, mixed use properties, small land development, okay? And these sometimes industrial, because an
Wow.
investor starts here with owning their home, and then they go, okay, first rental, I'm not sure about real estate investing. Oh, but it seems to be working. Second rental, okay, I'm going to get another one. Then, oh, this thing really works. Now I want to grow into like 15, 20 properties and leave my job ultimately. And then they get to a point and go, oh, now I want something a lot more interesting. Apartment buildings, construction, land development. So that's what we do. That's basically the flavor of what we do.
Wow. So you sound like you grow with the real estate investor because I imagine, yeah, that's a very common track. It's like, yeah, you accumulate multiple rental properties and you're like, oh, but let's sell off a few and then let's go with bigger. Bigger mean an apartment or a commercial, small commercial mall, or then, like you said, go into land development, which I totally see because those are the ideas that ran through my head in the past too.
We actually grow with the investors throughout their journey. And beneath that journey, there are all of the money sources I talked about, including joint ventures. I don't think I mentioned them, and general partnerships and limited partnerships. So that's really, if you want a visual of what it looks like, that's what it is.
But I'm sure that all these real estate investors have one common theme. Probably there's probably one kind of big financing mistake that you see that over and over again that your team deals with. Can you elaborate like the number one financing mistake and provide a helpful, actionable tip about it?
Yeah, I was actually thinking about this the other day because I'm always thinking, okay, how can I support investors better through their journey? And we work, like I said, with everybody from the point they're buying their house to the point they're scaling up and have multi-million dollar portfolios. And the other day I was thinking, what are some of the common mistakes here? And the there are two actually.
Okay.
The first one is lack of planning, and really just going to the broker and saying, oh, here is a deal, finance it for me, without having planned what that financing is going to look like. And I'm not saying that's, you know, it's a transactional approach of doing business. Here's a deal, go finance it for me. And what happens is the broker takes the deal and tries to fit it best where it fits at that point in time, which is not necessarily a strategic way of doing a deal. Where the power is for everybody, whether they're starting here or they're playing there, is to say, here's what I'm looking to do in the next X number of years. Here's how much money I have. How is my financing going to look like? And that's where we talk. Where is the money going to come from? How are we going to structure your deals? Do you incorporate, not incorporate? What will the down payment look like? How are we going to avoid getting stuck with more expensive type of money and keep your portfolio going? And then you go and execute. And then when you get to that milestone, you plan again. So this is a lot more powerful for everybody along their journey than just coming in and saying, oh, I got an accepted offer. Can you please finance it for me? And people trying to figure everything out at that point in time. So that's number one. Mm-hmm. Number two is investors using the wrong sources of capital to grow at any point in time. So typically, sophisticated investors are comfortable using private money. People who are starting out hear about private money, but may not necessarily in the right state of mind or risk appetite to use it. And I sometimes see clients who are early in their journey jumping at really sophisticated tools early on where they have other simpler ways of growing, but because they're hearing about these things in the media and podcasts, and it sounds really cool, and it sounds really like it's the fast way to grow, and they jump here where they actually need to take baby steps, and it's absolutely fine and a lot better to grow. So that's the second mistake.
I imagine the second mistake being also a very expensive mistake. Taking joint venture money, you're giving up a big pot of a big portion of the pie, right? Versus just going with a simpler product with the A lenders, like being like a Royal Bank or Scotiabank with the lower interest rates with better financing terms and not having to pay back after a short period of time. So it's more flexible in a way too.
Yeah, there is a time for every tool. Every
Yeah.
tool has a place and time. I can use the hammer to try to unscrew the screw, and it's not going to work. And there is a time for everything. So joint ventures, there is a place for joint ventures in your portfolio. Private money, there is a place for it. But I find sometimes investors hear about the tool, get excited about it, and go, okay, this is not what I'm going to do right now. And it's not necessarily the right tool to use at that point in time, given where they are and given their risk appetite.
Getting back to those two big mistakes, like what would you recommend, like as 2 tips to finance properly for investors?
Planning, Tracy. It's all about planning, because in the planning discussion is not about what do I get approved for? What is my approval limit? That's not a planning conversation. A planning conversation is, here are my goals. Here is where I am. Here is how much money I have. Here is now, where is the money going to come from to acquire the properties? How are we going to structure the deals? Do you use private? Do you use joint venture? Do you use A lenders? Do you use B lenders? Do you use private money? Here's the strategy that I'm going to use to grow. Okay, what does this mean? How are you going to exit the deals? If you're going to use a buy, renovate, refinance, will you be able to get your money back? That's a planning conversation. It's not about, okay, tell me what your income is. Let me take a look at your credit. Here is you're pre-approved for $1 million. That's not a planning conversation.
I'm so grateful that your team does that because it makes a big difference that you guys go through goals and go through, like, I think you provide a guide now where you go through a pre-planning consultation, and then if you go forward, there's like it's actually a several. Why don't you explain? I'm probably like killing your guide right now.
You're referring to the financing roadmap. So yes,
Yes.
we do a complimentary planning strategy session with clients who are looking to acquire income properties, and they get a detailed financing roadmap that talks about every aspect of how their financing is going to look like to support their journey. That is what it is. There's a number to get approved for. That's not what we do.
Well, that would be my number one financing tip for everyone, is to get this planning, this roadmap, because it's so essential if you want to buy more rental properties. Now, this leads into, well, how do you find a good mortgage broker? I think this is a good segue into this.
There is something that's always resonated with me, early, like for every time I seek an advisor, whether it's a mortgage broker or a financial planner or one of my mentors told me, who are you getting your advice from? Okay. And that's crucial, because you want to get your advice from people who have experience, not knowledge. There are two different things. These are two different things. There is knowledge and then there is experience. And in my view, experience is key. So if you're looking to build an income portfolio and you're looking to surround yourself with advisors, whether it's a broker or a realtor or a lawyer, what's their experience in financing income properties? How many deals have they done? Do they have investors who have actually experienced success as part of the work they do? Are they investors themselves? Do they understand your language? If I go to a financial planner, and with all my respect to financial planners, and a financial planner is saying, invest in this fund, my first question is going to be, have you invested yourself in these funds? Okay. So I want to see that they've experienced what they're talking to me about. So experience, success, true success stories. And again, at the end of the day, it's human connection. You want to be able to connect at a human level with your advisor and enjoy the conversation and enjoy your time with them. Because honestly, like, I appreciate knowledge and everything, but if I don't enjoy my time with my advisor, you know what, at least for me, that doesn't work. So pick someone you're comfortable with, who has the experience, who's walked the path you're looking to walk. And reputation on the street is very important. Okay.
Mhm.
Reputation, check the reputation, talk to people. And are they looking at your best interest? Talk to people.
Yeah, I would definitely recommend like going to those real estate investing groups. Like there's all over Canada, but there's definitely you interview a lot of people there because they're all looking for, say, potentially income properties or financing their income properties or commercial properties. But there's a bunch of people there that people could just interview at the spot versus having to always search on Google. But yeah, you have some great tips. Like definitely, I really value, of course, experience, but connection because that's a big one. Like if you can't talk to the person for years and years, like you can't have a beer or a civil conversation because sometimes there's some hard conversations, and having a person be more empathetic or understand where you've come from because they've been there, that's so helpful in your journey, right?
Yeah. So, and sometimes I see people go with connection and discount the other aspects, or go with the other aspects and discount the connection. And my best formula is all of the above.
Yeah, sure. So, question here: does your team work outside of Ontario? I get this question constantly on my YouTube videos.
Yeah, there is sometimes confusion around this point. So we service clients regardless of where they are, as long as they have a connection to Ontario, meaning they either live in Ontario or own something in Ontario. This is as it currently stands. It doesn't mean that down the road this is not going to change. We're working on changing it. So right now, to give you an example, someone from Alberta, a client from Alberta, somebody who is in Alberta wanting to do business with us, do they have anything in Ontario? If the answer is yes, absolutely. If someone's in Ontario and is investing outside of province, yes. If someone is in Alberta and doesn't have anything in Ontario, then right now it's a no, but soon this will be a yes. So I hope that clarifies.
Oh, soon. Soon would be a yes. Like, are we talking months or is this like
Months.
awesome? Okay, well, that's great news. Okay, well, thank you so much for your time. This is so helpful hearing hearing your team, what your team does, and also just the lots of actionable advice you provided. As always, we need to know where we can find you to get this financing roadmap that your team does. Such a gem.
Info at streetwisemortgages.com. Just one email. Or streetwisemortgages.com. We have a contact form there as well that emails info at streetwisemortgages.
Thank you, Dahlia. I'll see you next time. Okay. Hey, everyone. I hope you enjoyed today's interview. Now, if you have any questions for Dahlia and her team, make sure you contact her at info@streetwisemortgages.com. And I really, really, really encourage you. I really want to emphasize this point. Get that financing roadmap. It is free. Her team does this with you step by step. It is so instrumental because looking back at my experience and my journey trying to scale my rental properties. At one point, I owned 14 rental properties. If I didn't have this financing roadmap, it would have been game over. I wouldn't have the confidence to continue on in my journey. So I cannot emphasize enough To get this financing roadmap, it'll give you the confidence to continue on in your journey and scale your rental property portfolio. And hey everyone, if you want to check out more videos about financing unlimited rental properties, you definitely want to check out this playlist over here.